Terra Luna collapse, the $60 billion crypto crash that shook the world in May 2022. The cryptocurrency market witnessed one of its most devastating and surreal events: the complete collapse of the Terra ecosystem, including its algorithmic stablecoin TerraUSD and its sister token, Luna. What began as a promising experiment in decentralized finance ended in financial disaster, wiping out over $60 billion in market value and shattering the lives of countless investors. Let's break down what happened, how it unfolded, and what we can learn from one of crypto's most infamous crashes. What was Terra? Terra was a blockchain protocol created by Terraform Labs, co-founded by South Korean entrepreneur Kwon. Its goal: to build a stablecoin that maintained a $1 peg without holding real-world assets like dollars in reserve. Instead, Terra used a mechanism of algorithmic balancing between UST, a stablecoin pegged to the US dollar, LUNA, a volatile token used to stabilize UST's price. Here's the basic idea. If UST fell below $1, users could burn UST to mint Luna, reducing UST supply and pushing the price up. If UST rose above $1, users could burn Luna to mint UST. This mint and burn mechanism was supposed to maintain stability, but, in reality, it created a circular dependency. The crash. How it all fell apart. In early May 2022, UST began to depeg from the dollar, dropping to 99 cents, then 90 cents, and continuing downward. Here's how it spiraled out of control. Mass sell-off. Large UST holders began selling, putting downward pressure on UST's peg. Death spiral. As UST fell, the system minted massive amounts of Luna to try and restore the peg. This flooded the market with Luna, hyperinflating its supply and crashing its price from over $80 to fractions of a cent in days. Loss of trust. Investors panicked. Both UST and Luna lost almost all value. Billions vanished. The aftermath market impact. Over $60 billion in value was erased. The crash triggered a wider crypto sell-off, affecting Bitcoin, Ethereum, and nearly every investor devastation. Countless retail investors lost life savings. Some were driven to despair, and reports of suicide surfaced. DeFi fallout. Many decentralized finance apps and protocols built on Terra were wiped out overnight. Stablecoin scrutiny. The idea of algorithmic stablecoins came under intense fire. Regulators worldwide began re-evaluating how these assets should be classified and monitored. What about Kwon? After the crash, Kwon became one of the most wanted men in crypto. South Korean authorities charged him with fraud and violations of capital markets law. He allegedly fled to multiple countries and was eventually arrested in Montenegro in March 2023, using a fake passport. As of 2025, extradition battles continue, with both the US and South Korea seeking to prosecute him. Key lessons from the Terra collapse. Algorithmic stablecoins are extremely risky without real assets backing them. Stablecoins like UST can collapse under market pressure. Crypto isn't immune to Ponzi-like dynamics. Terra's model relied on constant demand and investor confidence. Once that faltered, the system unraveled. High yields equals high risk. Terra's lending platform, Anchor Protocol, offered 20% APY on used deposits. This too good to be true promise attracted billions, but was unsustainable. Transparency matters. The centralized control of a supposedly decentralized system raised major questions about governance and accountability. Regulation is coming. The collapse fueled calls for urgent regulation of stablecoins and crypto exchanges worldwide. Is Terra gone for good? Not quite. In late 2022, a new chain called Terra 2.0 was launched. The original chain was rebranded to Terra Classic. However, both tokens have failed to recover in any meaningful way. For most investors, Terra is now a cautionary tale, not a comeback story. Final thoughts. The Terra Luna crash was more than just a market failure. It was a psychological shock to the crypto industry. It destroyed trust, upended portfolios, and reminded everyone that code is not always law, and promises of decentralization don't guarantee safety. In a space where innovation often outpaces regulation, the Terra collapse taught one hard lesson. If stability relies on confidence alone, it's only stable until it's not.